The backend just flagged a number it has never logged before. IBM closed down 25%, the worst single day in its 64 years of trading. Worse than Black Monday. And the trigger wasn't just a revenue miss. It was the company's own warning that enterprise clients are pulling budget out of software to pay for hardware and memory. Softer CPI lifted the rest of the tape today. But that one name tells you where the money is actually going. And stick around, because we close out on SignalFinder Pro's best of best ARKG at the top of the ETF rank and FTNT at the top of the stock rank. SPX closed up roughly 0.4%, and Nasdaq added just over 1% after June CPI came in softer than expected. VIX ticked down on the session. But look at the Dow. It finished essentially flat, up 0.02%, while the Nasdaq ran over 1%. That gap is mostly one name. The Dow is price-weighted, and IBM lost 1/4 of its value in a single session, dragging the index while the rest of the tape rallied. Underneath that, the scan logged a bearish divergence from the June 2nd peak. SPX printed a higher high, while VIX didn't set a new low, and that flag is still in the data. NDX closed below its 50-day moving average 3 times in the last 6 sessions, including yesterday. Today's CPI bounce pushed it back above that line, and the system's watching whether it can hold there. After that soft CPI print, the dollar slipped toward the 100 level, and the 10-year eased to 4.58. That's the relief part. But the long end barely joined it. The 30-year closed at 5.08, a 6th straight session above 5%. Since 2008, the system's logged only 38 closes above that 5% line, and 22 of them came this year. And net interest expense is now approaching 20% of total tax revenues. TLT broke below a key support zone in recent sessions. Post-CPI relief and structural yield pressure are pulling in opposite directions here. Crude ran higher on Hormuz disruption risk, adding over 2% to settle around $80. But here's what the scan's flagging. The barrel moved, and the energy stocks didn't follow. XLE added just over 1/3%, XOP about the same. Some positioning looks like a sustained geopolitical bid, but others see it as a short squeeze premium that unwinds once the tension fades. Oil is up roughly 40% year to date, and that's keeping inflation in the structural picture for yields. The direction beyond today is still an open question in the data. Gold bounced after softer CPI compressed rate hike expectations. The backend's logging GLD back above 370. The mechanics here are clean. When the market prices out Fed tightening, gold firms. Silver followed, up almost 2%. But the standout was copper miners. COPX ripped almost 6%, a sharp reversal off this week's low, and it's now on the system's watch list. The whole metals complex closed green on the post-CPI read. International equities caught the CPI bid. Emerging markets led the group, up almost 2%, and Japan added over 1% on AI hardware demand and global easing expectations. But the read isn't uniform. Taiwan finished flat, while the rest of the region rallied, carrying energy supply constraints that add structural friction. The short-term bid in international equities is real, but the chart and the macro story don't fully line up right now. Bitcoin added close to 2% today after that softer CPI hit, and Ethereum ran harder, up about 4.5%. The back end picked both up fast, but the structural read on crypto is more cautious. Bitcoin's at 64,009, pressing right up into the level the scan flagged at 66,003. That's the mid-June high, and the rally highs keep stepping down from there. Bitcoin peaked above 82,000 back in May, then only got to 66,000 by mid-June. Counter-trend bounce is the working read in the system. The next question is whether Bitcoin can clear that 66,000 line. Here's where SignalFinder Pro's best of best comes in. The system filtered 116 symbols down to the current ranked shortlist, scoring on technical setup, relative strength, and sector alignment. What you're seeing on screen is the backend's live output as of today. We're going through the top sector, the top ETF, and a top stock right now. On the sector ranking board, healthcare sits at number 1, XLV, though it's in a lagging state today, down close to 2% on the session. Industrials holds number 2 in a leading state, essentially flat. Technology checks in at number 3, also leading, picking up over 1% as the Nasdaq bounced on that CPI data. It's a split board. The highest ranked sector is lagging on the day, while the momentum leaders sit lower in the rank. The number 1 ETF out of today's best of best is ARKG, the ARK Genomic Revolution ETF. It's the top-ranked fund in the system's filtered list right now, adding about 1% on the session. The genomic space has had a volatile run, and the back end is surfacing it at the top of the ETF stack today. The chart on screen shows today's price action alongside the SignalFinder Pro viewer rank. Top stock from today's best to best is FTNT, Fortinet, the cybersecurity meme. It added nearly 4% on the session, one of the stronger individual moves in the shortlist. Cybersecurity demand tends to stay firm when geopolitical tension is elevated, and the back end called it out at number 1 on the stock side of the rank today. The chart and the SFP viewer are both on screen. Let's bring it together. Softer CPI lifted most of the tape today, but the session's real signal was IBM, down 25%, its worst day in 64 years, on a warning that enterprise budgets are moving from software to hardware. The 30-year yield holding above 5% is the slower structural pressure still running underneath. Best of best surfaced ARKG at the top of the ETF rank and FTNT at the top of the stock rank. Verify both live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.